Hey guys, Andrew Henderson, Nomad Capitalist, doing what will be the last of many videos here in Cairo. Wanted to talk about a tax mistake that a lot of US citizens make when leaving the country to run their location-independent business or do their location-independent freelance work. Now I should disclose, I'm a party school dropout, I'm a serial entrepreneur, I have a lot of personal experience in this regard. I am not an expat tax expert, I work with many. And so if you should want to get their advice before you do anything, you can go to nomadcapitalist.com for some help, or you can find your own expat tax guru to help you out. So I did a video called The Nomad Trap, largely for non-US citizens. You can Google The Nomad Trap and find it, in which I talked about how a lot of Europeans in particular that I've spoken to think, oh, I just leave my home country, I travel the world, and there's not much to do to get out of paying tax. Well, in some cases that's true, depending on the country. In other cases, people are finding themselves subject to back tax bills because they didn't follow the proper protocols to leave their home country. Now, in the United States, there's no way to get out of the tax system. So long as you're a US citizen, you're gonna pay tax. Until you give up that US passport, you're on the hook for tax in the United States. No ifs, ands, or buts. So you have to prepare. But there is a misunderstanding of how the US tax exemption for expats work. And there's a law, or part of a law, called the Foreign Earned Income Exemption. We've got a separate video on this. In a nutshell, it allows you to exclude a little over $100,000 of actively earned income every calendar year. So rents from real estate, stuff like that does not count. Active income, such as from a business, a salary, freelance work, etc., does count. And so what a lot of people that I've heard from over the years do is they say, I'm going to leave the United States, I'm going to go travel the world, I'm going to be a nomad, I'm going to spend very little time in the US, I'm going to qualify for that foreign earned income exemption through one of the two ways to qualify, and I'll just exempt the first $100,000 in profits. Two problems with that. Number one, without a proper structure, yes, you will exempt yourself from income tax, federal. In 46 out of 50 states, you'll exempt yourself from state. And in my limited experience, you'll exempt yourself from city income tax if you're from a city that has one. What you will not exempt yourself from is Social Security tax and Medicare tax. And if you're self-employed, either because you have a business or just because you work for yourself, i.e. freelancing, then you have to pay both halves. You have to pay the employer half and the employee half. That's 12.4% for social, it's 2.9% for Medicare, so that's 15.3%. And it stings even more when you don't pay income tax because there's nothing to deduct it against. So you're paying 15.3% of your income. That could be avoided if you set up an offshore company, pay yourself through the company. Now, not everyone in every business line qualifies to do that. There are some businesses where you just got to pay it. I would say most of the people that I talk to and help qualify to set up an offshore company and exempt themselves from that 15.3%. But the mistake that a lot of folks make is they simply go overseas, they don't make the proper planning, and then they run into a situation where they're paying $15,000 that some proper planning could have prevented. And so this is where I've learned the hard way, not in this specific way, but in other ways, that being cheap and not planning ahead rarely pays off. A little bit of planning to see if you should set up an offshore company, and then to go out and actually set up the offshore company is very useful and can save you a lot of hassle down the line. Now, the second mistake that folks make, same issue, but the second mistake is solved by the same solution of figuring out, do I need an offshore company? How do I set one up? Where do I set one up? And that is entrepreneurs and freelancers as well, who don't think that they'll exceed that cap. So in 2017, the cap is $102,100. You can make that much money and it's tax-free. Again, not Social Security, Medicare tax-free, but income tax-free. And people say, well, my business will never be that big. I'll plan later. And then the business takes off, it explodes. I've seen so many people, especially in Amazon, Shopify, e-commerce, and also coaching and consulting, high-ticket coaching, where they're just starting out, they figure, how can I possibly make 100 grand in the first year? I'm gonna go bootstrap my business, I'm gonna go work overseas. Who needs a company? Who needs any planning? I'll never make that much money the first year. Oops, made 200 grand. And then that second $100,000 is fully taxed. And what you have to understand about the US tax system is that the Foreign Earned Income Exclusion, when you go over the cap, you don't start paying at the rates for zero. You don't start paying at, 10% tax rate? you start paying it whatever the tax rate is at $102,000. You know, what is that, 25, 20, whatever it is. So that $100,000 above the exclusion, in my example, if you make 200 grand and you get taxed on 100 of it fully, could be 40%, could be 45 or 50% when you add in Medicare and all the different income taxes. So again, not every entrepreneur qualifies to use an offshore company. There are a few different types of businesses where you just got to take the hit. In most cases, most everyone that I talk to, most everyone that I'm helping, you can set up an offshore company and you can exempt the income above that level. Now again, there's a lot of nuance to this that we can't go into a YouTube video. So definitely go to nomadcapitalist.com and get some help, or contact your own tax person to explain this in greater detail for your specific situation. But the bottom line is, a lot of people are being sucked into tax unnecessarily, up to $15,000 of it, just on basic levels of income. And then a lot of other people who are expats and living overseas, nomads, are paying tax above and beyond what they need to because they didn't have the proper structure. So the key is, do you qualify to have an offshore company? Can you have an offshore company? And how does that work so that you can legally put your tax at zero or much lower than it would be if you didn't have a company? When we're talking about tens of thousands, and in some cases hundreds of thousands of dollars, it's worth doing some simple planning, talking to someone who knows what they're doing, and putting the proper plan in place before you leave the US. And if you've already left the US, making sure you don't spend another day potentially paying hundreds of dollars in tax.